The markets are feeling the heat on the back of the reciprocal tariffs announced by U.S. President Donald Trump. The local bourse opened with everything in the red Thursday morning. The JSE took its cue from weaker global markets. Local developments have also weighed on the JSE, particularly concerns around the future of the GNU.
I'm seeing that there's instability in the market and there's been a decline on the JSE of up to 3% already. And this is an aspect of what I believe is multifaceted things going on in the market, primarily driven by the instability that's coming from the government of national unity. I've watched the videos this morning of the speeches from the DA voicing their discontent and their unhappiness with the report regarding the budget speech. And so there seems to be instability, and this is then affecting the confidence in the market.
The rand continued to extend its losses, trading shy of the 19 rand mark against the US dollar.
The recent political tensions around the disagreement on South Africa's budget and so worries around the stability of the GNU have also negatively affected the rand. But the DA is likely to continue to wish to remain in South Africa's coalition government. Of course, if this does change, then there could be a further impact on the currency. With the financial markets reacting overnight over both the US tariffs and South Africa's budget disagreements, the rand moved in thin trade and could see some further moderation today on more liquidity at open South African markets, already, of course, at 1877 versus closer to 19 to the dollar.
While the local unit has been trading at its weakest since Wednesday, some analysts believe that its losses could be capped by the falling US dollar. This is due to Trump's tariff announcement that keeps traders on edge.
We've seen that today is trying to recover some of the lost ground, and all because after Donald Trump announced all those tariffs which were worse than we thought, we've seen the US dollar itself losing most of its ground, and that helped to get the rand to at least recover some of the lost ground.
There are concerns that the current weakness in local currency could fuel inflation that has been coming down in recent months. Consumer inflation has been contained below 4% since the beginning of the year.
Well, the South African rand fell against most other countries in the world, and obviously the reason for that has to do is twofold actually. The one has to do with the budget, the on and off budget. And the other one, and I guess that is the most important reason why the rand came under pressure, has to do with the possible end of the government of national unity in South Africa. That, of course, will be bad for the South African economy, and the financial markets are reacting to that.
Market analysts say fear lingers on as the market continues to struggle amid local and global worries.
Well, I think that's what the market's struggling to do at the moment, is actually price in these tariffs. So, I think it's always dangerous to say this time is different in markets, but the fact is this time is different because we don't know what's going to happen next, and we don't know how much of these tariffs are posturing, trying to prompt bilateral talks around individual trade agreements. How much of this is, I suppose, trying to normalize the picture. But from traditional economic theory, we know tariffs are bad. One, they create trade wars.
The markets are likely to remain jittery as individual countries seek to ascertain the specifics of the tariffs attached to specific products they export. Nothando Makutulela, SABC News, Johannesburg.